Welcome, Accounting Boffins. You are with Ashraf Patel and the crew. Today, we're continuing with cash budgets. We're doing a revision question to ensure that you fully understand and grasp all the questions around cash budgets. Okay, so here we go. A quick recap. Remember, when dealing with the cash budget, what did we say? We said that when we're dealing with the cash budget, we said that you're looking at receipts and payments, and when you're working with a projected income statement, you are looking at your incomes and expenses. Remember the terminology: income that we have earned and expenses that we have incurred. Okay. So, once again, what is a projected income statement? A projected income statement is used to plan and predict the amount of profit the enterprise will generate through its future operations by setting out the estimated, remember, we are forecasting for the future. So, what are we forecasting? Our income and expenses for the forecast period. All right, okay. So now we are expected to indicate whether the following statements are true or false. A cash budget is prepared to show the actual receipts and payments for a specific period. What are we talking about? Cash budgets. So obviously, yes, we are talking about receipts and payments. So obviously, the statement will be true. A projected income statement would reflect the expected profit or loss for the budget period. Once again, look at the terminology. They're talking about a projected income statement would definitely reflect your profit or loss for your budget period. Okay. Indicate whether the following statement is true or false. Only nominal accounts are recorded in the cash budget. Right, let's think about this one carefully. Is it only nominal accounts that appear in my cash budget? And the answer is actually false. Why? Because in my cash budget, I could get the purchase of land and buildings. Now, land and buildings is certainly not a nominal account. It's an asset account. Therefore, this statement would be false. And I'm explaining to you why it's false. Moving on to our question, we are now told that we have information relating to Z2 Builders for the 2 months ended 30th of September 2020, right? So that's our budget period. Okay, what are we expected to do? We are expected to complete the debtors collection schedule, right? For the 2 months ended the 30th of September 2020. Now, this is when we talk about a debtors collection schedule. The emphasis is on credit sales. This is very, very important. The moment the question directs you towards a debtors collection schedule, immediately you know that to start completing that schedule, you need your credit sales. Right? Okay. Now, this is your monthly total sales that you are given here, right? And obviously, there's your actual and your budgeted. But remember, this is now total sales. Whereas your focus when you are doing a debtors collection schedule is your credit sales. Okay, now, a slight variation in this question. Look at the different method the examiner uses for this particular question. The question says, debtors pay according to the following trend. Right? Remember, we need the trend to determine how we're going to draw up our debtors collection schedule. So therefore, 50% pay in the month following the month of sale. In other words, if you sold in June, in July you will collect 50% of that debt. Then they give you an unknown percentage pay in the second month following the month of sale. An unknown percentage is given to you. So in this particular instance, you can clearly see you have been working, you know that generally you are told 50%, 20%, 18%, whatever the percentages may be. But in this particular activity, or in this particular question, you don't know the percentage that you have to calculate on, right? But like we say, don't fear when Ashraf is near. Because I'm going to show you how you go about doing a question of this nature. Okay, so the same applies to the month thereafter is also an unknown, and then you are told that 2% is written off as irrecoverable. Okay, so this is the trend in which our debtors will be paying us. Right, so immediately we go on to the question and we say, right, fine. Now look at the information that you have, right? You are told that this is your credit sales figure, which is exactly what we want. So we have our credit sales figure, right? We are also told that in May, I have my credit sale, right? Now remember what was the trend? They pay you 50% in the month after the month of sale. Thereafter, they pay you an unknown percentage. Then they pay you an unknown percentage. And then you write off the 2% as irrecoverable. So my question to you is, looking at May, how will May impact on my budget period? So, if I sold for credit in May, some of the 50% of the debtors will pay in June, right? A percentage will pay in July, a percentage will pay in August, and eventually you'll write off the 2% as irrecoverable. So here you can see that May will be June, July, and August. So obviously, this is not going to impact on your September figure. That means by that time, you'll be writing off the debt as irrecoverable, right? Meaning it will be your bad debt. Okay, but keep that in mind because later on, the question may ask us to calculate the bad debt. Okay, now look at June. June's credit sales figure is 300,000, right? So there's my 300,000 as my figure for June. What am I told? I'm told that 50% will pay me in the month after the month of sale. So in other words, in July, I'm going to be receiving the 50%, right? In August, I'm going to be receiving a percentage, but I don't know what is the percentage. Right? In previous question, you were given the percentage. But watch. Look at the information that you have. Here we go. You are told that in August, you are receiving 90,000. Right? So, watch my calculation very closely here. What do I take? I take my 90,000 that I'm receiving. Okay? I'm taking the 90,000 that I'm receiving over the credit sale of 300,000, right? And I'm going to express it as a percentage. So what I do is I take the 90,000 times 100 because I want to express this as a percentage, right? So watch. I take my 90,000 times 100 divided by the figure of 300,000. Okay? And that will give me a percentage of 30%. I repeat, because of its importance. Number one, take the amount that you are receiving, which is the 90,000, right? So there we go. Take the 90,000. Take your 90,000 over the 300,000, which is the credit sale, times 100 over 1. Obviously, it will give me, like we calculated, it will give me a percentage of 30%. Okay? So there we go. I've got the 30% now. This indicates what to me? That the percentage that I'm receiving, we said 50% in the month after the month of sale. Thereafter, I'm receiving 30%. And how did I do it? Based on the, can you see June's figures are filled in for you? And that's where the actual crux of the question came in. Because if you didn't understand that, you would be unable to do further calculations, right? So therefore, looking at June now, you can clearly see that we've indicated that June, obviously we know July will be the 50%, right? August will be what we've calculated to be the 30%, right? Let us now do September, right? Understand, we're still working with the credit sale of June, right? What do? Same procedure. Here goes. We take the 54,000, right, times 100, remember we want to express as a percentage, divided by the original figure, which is your credit sale of 300,000, and that will give you a figure of 18%. In other words, you can clearly now see what is your trend in terms of your calculations. Once again, 50% in the month after the month of sale. So, if you looked at June, right, obviously they did not give you July, but obviously you can see from June you went into August. That was the month after that month. So the first month was the 50%, which we would have received in July, obviously. But in August, we're receiving the 30%, and you saw and actually showed you how we calculated the 30%, right? And then obviously in September, based on your June credit sale, you are now receiving the 18%, and you can clearly see now that your June figure, how will it impact in September? It will be the 2% that you will write off as irrecoverable. So, accounting boffins out there, you had to use the given information in order to determine your trend. And as we have now seen, we know our trend is what? 50% in the month after the month of sale. Thereafter, it's 30%. The month thereafter and the month thereafter is 18%. And then eventually, you write off your 2%. Okay, now once we've calculated that, once we've ascertained that we know exactly how to work out our trend, the rest of it becomes easy, isn't it? Piece of cake, chocolate cake, my favorite. Okay, here we go. So now it's very simple. You're going to take your June figures, right? And you're going to calculate the impact on August and on September. And here you can clearly now see that this is just information regarding your receipts. They're telling you that obviously if the cash sales is 150,000 Rand for August, 75% is your credit sales. You can clearly see that 25% of those total sales will be your cash sales, right? Again, information that's provided to you. So if we now look at our completed debtors collection schedule, this is what we have here. Take your 375,000, right? If you take your 375,000, 375,000, obviously, we know that that's July. They'll pay in August will be times your 50%. And here we go. You're going to get 187,500. If you take July's figure, multiplied by the 30%, let's do that. Take the July figure, 375,000, times your 30%. Clearly, you can see that it's 112,500. So in this case here, clearly you can see that once you've ascertained your percentages, it becomes easy to calculate. You know July, that is your 50%. Let's put it there. That will be your 30%. August, if you take 450, we know the month thereafter is the 50%. So in this way, you now complete your debtors collection schedule. Here you can see, here's our other question that we referred to early on, where you had to calculate the bad debts. Now remember, what did we say? We said that 2% is written off as irrecoverable. Looking at my calculation, your sale was 262,500 times the 2%. Clearly you can see that the amount of bad debts will be 5,250. So what was important in this segment was to ascertain, firstly, the 50% was given to you. We calculated the 30%. We calculated the 18%. 50 plus 30 is 80, 98, and there's your 2% bad debt. So these are your percentages that will be effective in terms of your trend. Okay. In summary, when you are doing a debtors collection schedule, most important figure is your credit sales. Once you've ascertained your credit sales, you now look at your trend. What is my trend? What are my percentages? And then you just go back to your credit sales, calculate your percentages, and voila, you've got your answer. Okay? Let's take a quick break, let's refresh, and we'll see you in a jiffy.